NSI is no longer a shrimp company, it's a corporate shell. Natural Shrimp has reached a critical breaking point in its corporate evolution and financial survival. The latest 10Q confirms a total shift to a liquidation basis of accounting for the firm. This is a formal admission that the company is no longer considered a going concern by auditors. For the 9 months ended December 31st, the company reported exactly zero revenue from operations. The operational core of the business has been completely stripped away to satisfy creditors. To survive, NSI transferred its primary fixed assets to its creditors in a desperate move. This strategic transfer extinguished roughly $36 million in senior debt from the books. While this cleans the balance sheet, the remaining liquidity is absolutely alarming for shareholders. As of the filing date, the company held only $12,239 in cash. Against that meager cash pile sits a net liability of $8.9 million. The company is essentially a shell funded by constant and dilutive private placements of shares. With over 1.2 billion shares outstanding, dilution has been the primary survival tool. But there is one potential catalyst: the new agreement with Hydrenesis Incorporated. NSI is attempting to pivot from farming shrimp to licensing the underlying technology instead. This perpetual license could transform the company into a high-margin intellectual property vehicle. However, the bear case is stark: the deal is not yet consummated or finalized. The agreement requires a $1 million fee that NSI simply does not have in cash. Furthermore, internal control failures leave the company vulnerable to further financial instability. The accumulated deficit has ballooned to a staggering $187 million. Investors are now holding a ticket to a court-supervised liquidation process with high risk. The bull case is an asymmetric bet on a successful IP metamorphosis and restart. The bear case is a total win down of a failed biotechnology experiment in shell. Whether NSI emerges as a licensing engine or vanishes entirely depends on one single deal. It is the definition of a binary bet in the micro-cap distressed asset space. The risk of total loss is high, but the potential for a pivot is the only play. Watch the cash levels closely as the company attempts to fund its new direction. The transition from a farm to a shell is complete. Now the real gamble begins. Ultimately, NSI is fighting for its life through a high-stakes corporate metamorphosis. The path to recovery is narrow, fraught with risk, and depends on external funding. This is the story of a company that lost everything to find a new purpose. The final verdict depends on whether the Hydrenesis agreement can actually be consummated. Stay tuned to the filings to see if this shell ever becomes a company again. That is the full breakdown of the NSI liquidation and the binary bet on IP.